Hello, this is Jay King, self-made millionaire, coming to you from MillionairePennyStocks.com. And today I want to talk to you about stocks that you can play over and over and over again. These are obvious patterns, and when you recognize the support levels and the resistance levels, you will have a better entry point into these trades. Now write this down, LIVE. LIVE is a stock this year that we've played probably about 6 or 7 times already. And we've made money each time on this stock. I haven't lost a penny on these stocks. Now get this correct. Now I don't mind minimizing my loss and taking losses on trades because that's a part of the game. But what I'm trying to teach you today is there's certain trades that you can put in your watch list that are obvious. These patterns are obvious, and when they hit these levels of support, these are good entries for you to buy. So put this in your notes or in your watch list. LIVE, we made a lot of money on this stock last year, but this year the stock doesn't have as much price action, but I like the 10 to 15 cent spread that it delivers. And if you look at the pattern, look at February 29th, you see it open at 149. The day low was 145. The day high was 146. Let's go over this real fast. The opening is when the stock opens. The day low is the lowest that the stock goes, which we would call the lowest day is the lowest levels of support. Support just simply means when the stock will not go beneath that price. And the highs we would call, the day highs we would call the levels of resistance, meaning that the stock won't go past that particular price. Now stay with me, this is going to be a short lesson, but this is a stock that you can buy every time it reaches its lowest level of support. When you look at this historical, when you look at this chart or this historical, the historical quotes on eTrade.com, when you look at March the 1st, notice it opens at 158, and then we see the day low was 144, but then you have a 14 cent spread between 144 and 158. Now let's look at the next day. Notice it opens up at 154. Now you have a 138 day low. It met its lowest level of support at 138. And we bought here, I mean, I can't remember how many shares we bought, but we bought it around 139, 140. But look here, you have an 18 cent spread. Now let's go to the next day, March the 3rd, 152, it opens up, goes down to 149, but then it goes up to 155. Now let me say something really fast. When you understand these patterns, you should never buy a stock at retail because this particular pattern is obvious. We understand that the highest level of resistance is about 156, 157. 155. So if you buy right here, this is what novice traders do. Novice traders buy at retail when they really should be buying at wholesale and selling at retail. And so it's so important, you know, when you go into Walmart or Target, you would not pay $1,000 for a PlayStation or $500 for a pair of socks because that would be crazy. Well, when you don't trade with skill and education, a lot of times experienced traders that use level 2 and level 2 charts, they can recognize when inexperienced traders are making inexperienced entries, because on a level 2 chart you can see the amount of shares that are being entered in by the trader and where he's buying the stock at. So if I look at a level 2 chart and I see someone buying at 158, then I know they're novice because this is not a good entry point. This is a good entry point. This is wholesale. Now look, when we go to the next day, let's go to March the 4th. I wouldn't buy at 148 because that is not the lowest level of support. We've already identified the lowest level of support being at 138. So a good level of support March the 7th is at 140, 141. Then we get that 10 cent spread. Notice it opens at 148, goes down to 145. I still would not have bought right here because we have already identified that the best entry point for LIVE is 138 to 141, 142. Now, I want to show you one thing. March the 18th, let's say if it opens up at 147 and it drops all the way down to 139 or 140. Now, this is the thing. You have to ask yourself, should I minimize my risk if I buy at 140? And me personally, I would. The reason why is when it drops below the level of the lowest level of support, which is 138, when it drops below that, I don't know where this stock is going to go. It can go to 90 cents or 80 cents. So if I would have bought here, let's say at 139 or 140, I probably would have cut my losses at 135 or got out the trade at 136 because now it's entering into a new level of support that I can identify on the chart, on the technical chart or the historical quote. But it would have eventually came back. But I have to manage my risk. One of the most important things about trading is not how much money you make. It's not about being hyped or emotional or getting a wonderful stock pick. The number one most important thing about trading is learning to manage your risk. If you enter into a trade, you need to know what your goals are, and you need to already know in your mind where you would exit a trade. So if I would have bought this trade at 140, I would have already been out at 136 or 137, because if it would have fell below the 138, that level of support, which we've already identified the lowest level on these charts, see, I wouldn't have known that it was going to go all the way down here. So I have to cut my losses, because no one knows when a stock falls below support levels. We don't know where that stock is going to go. This stock could have went at 115 or $1. And so it's so important to manage your risk when you're trading. Today, I hope you enjoyed this lesson. Please share the lesson. These are stocks that are obvious. They're obvious patterns. And when they enter into the lowest levels of support, you can buy 1,000 shares. Look here, you would have had the next day, you would have had about a 17 cents upside. And you would have a 17-cent spread, which is $170. So on this particular trade, can you imagine, or on this stock, this ticker symbol, which is LIVE, on these particular trades that you're making, if you make 5 or 6 of these trades and make about 90 bucks on each trade, it doesn't have to be 1,000 shares. You can buy 500 shares and get about a 10 or 15 cent spread. I know you are paying commission, but at the same time, remember, as long as you're making more than your commissions, you're fine, because you're not going to become rich overnight on one trade. It's all about learning the skill set as it relates to trading and taking your profit on each trade and building your account by taking small profits. Last year, I made over 600 or 700 trades, and I did really well. I did over 300 and something thousand trading last year. And so it didn't come from just one trade. Actually, we had a really big trade that we were successful on last year. And we made over 50 something thousand on that trade, which doesn't happen all the time, but when it does, congrats to those things. But my main strategy is I like to take small profits, and from there, I like to build an account by using the strategy of cutting the elephant piece by piece, not trying to eat the whole elephant at one time. Now remember, these are not the type of stocks that's going to grow an account fast. And these aren't the type of stocks where you're going to make a lot of money on, but these are stocks that are safe. And I'm just showing you, really no stock is safe, but I'm showing you how to trade safe. That's really the better way of saying it, because Live is a stock. Every time you see this stock go to 135, 138, 133, you better believe that Millionaire Penny Stocks has bought this stock, because this is on my watch list for stocks that have various patterns that we're familiar with. So I just call these stocks obvious patterns. These are obvious patterns that can be played over and over again. Sometimes you'll find yourself buying a stock like this 20 to 30 times in one quarter. Maybe not 1 month, but 1 quarter. Within 3 months, you maybe can buy this stock. Every time it enters into the lowest levels of support, you can buy this maybe 1,500 shares or 1,000 shares. And once you get that 5 to 10 cent spread or 12 cent spread, then sell the stock and continue to repeat that process over and over again. And again, look at this on your basic brokerage account and go to the historical quotes, and I want you to identify these patterns, how the stock opens up, and then the lowest level of support is here is 144, but I would even bought right here. I still would have waited, and I probably would have took a buy right here, which we did buy, but I'm just showing you for example. You have to identify the patterns before you know where the lowest level of support is. But we see here all these support levels are in the high 140s and mid 140s. So your goal is to get beneath these levels of support and buy at a better entry, which is going to give you a better entry in your trade, and it's going to be easier to make money when you're patient and you let these levels of support, identify your best levels of trades. Now remember, novice, they buy at retail, but experienced traders buy at wholesale. And so how do you buy at wholesale? By identifying the lowest levels of support, by looking at the historical quotes or looking at a chart to identify when the stock goes at 134, 135, this is going to be my best entry point. Now remember, it may take 1 week, 2 weeks, 2 days, 3 days, but it's worth the patience. These type of trades are worth you being patient, because remember, your whole goal is to maximize profit and minimize losses. Again, this is Jay King, Self-Made Millionaire. When you get a chance, please share this video, and we would love for you to visit millionairepenny-stocks.com. Let me train you, let me coach you how to go to the next level as it relates to the stock market. Have a great day.